What's good, guys? We are back again for another day. This is trading week revision. This week wasn't too bad. Possibly missed a few opportunities. We missed a lot of dates as well because there wasn't any opportunity for us to actually take a buy or a sell in these cases. So yeah, hope you guys enjoy, like this video, and let's get straight into it so we can further improve to the top. By the way, just before I get into this, down below is Traders Headquarters if you guys want to join me to the top. Like I said, I'm not going to stop. Already halfway through the year. I haven't stopped. Down below, and let's get into it. Honestly, guys, this week was very boring. Nothing too great happened, and this was the first trade I took on Monday. It was a sell. The reason why I took a sell here is because of how price was acting and just what happened. So I'll clearly show you right now. Go to the 30-minute time frame, just what I saw and what I've realized now, guys. If I was to put a box over this, it would be something like this, right? And we can clearly see this is phase one. Price started to trail up here, as you can see this being phase two, either manipulation or possibly continuation back to the downside. So it was going well with the bias, because if we zoom out here, we can clearly see this is a downtrend bias. So we should be looking for sells. That's why I thought this area was a really good area, because price came all the way up and it was actually taking its time. It was not on time with London or New York, so that was the only problem. If it was on time with London or New York, it would have been a better trade. And you can clearly see what happened here. And what I've started to realize, once price dips down first then up, sometimes price comes back down for the retest to push up more, and for this case price didn't even come back. So when I took the sell here, guys, I took the sell at the monthly open price. The reason why I did, and the reason why I have my stop loss just here, is because there's a liquidity right here, 30-minute liquidity. So I was like, perfect, I'm gonna have my stop loss just above here, so if price decides to come up and grab it, I'm still in there for the trade. And that's why I put it just above here, because it was a good area, good option. Wasn't trying to stay up too long, and you can clearly see what happened after this. Price just decided to reject this area. It looked like it was going to push down, continue pushing down. Once we go to the 5-minute, we can have a better analysis. So price started pushing down. It was taking its time. It wasn't as strong as I would like it to. And then you can just see this big push and, coming back up for the retracement. And overall, what happened to this trade is that price was just moving very slowly. And in the end, the sell that I thought was a sell, it ended up being a retracement for price to continue to go higher. So that's why later on in the day, you can clearly see price just broke back up. It did not come close for price to actually hit the area where I would move my stop loss to break even, which would have been down here. So it is unfortunate. Usually on Mondays and Fridays, I'll risk half the amount, so I didn't lose that much. I only lost half the amount just off the jump. And yeah, the reason why I thought this was a good trade was because I'm pretty sure there was news, and if there wasn't news, there was just a monthly open price here and a liquidity grab here. As you can see, price is like rejecting the area as it just touched it with the green candle. And that's why I really thought price was just going to reject off this area without even grabbing the liquidity and continue pushing down. But obviously, new day, new week, and you can clearly see what happened. Price decided to push down a bit, which ended up being just a retracement to push up further. Could I have done anything to avoid this situation? If I was to cash out here, it would have been a problem because price can still come back up here, tap this, and then push back down. That's why I didn't touch anything, because this was a good area to have a full hit, stop loss hit, if that makes sense. So that's Monday, and lessons to learn on Monday is probably, I cannot see no news bar, because usually there's like a news icon here. If there's no news icon, or if there's no news on that day, be very patient. Don't worry about trying to get in a trade. And that's something that I just needed to learn, really just focus on timing, or just being very patient, because if I was to see the best area to take a sell, it was either if price went up here and grabbed both of these areas, or if price came up higher here, and this would have been a better area to take a sell. So from this though, the reason why I have this purple barrier or purple box is because this is essentially the range box. So if price hits one of these areas, you would expect price to reject off these areas back to the downside or the opposite side, which is a potential chance of happening. That's why I boxed this move, because obviously it's in a downtrend and price came back up for the retracement, but it could potentially be a range box. So As we continue the day, we can clearly see I did not take no trades on Tuesday or Wednesday because it didn't present me with any opportunity that I was content with or happy with. Because yeah, price was just acting a bit weird. If you guys didn't know, these are two separate daily open prices. It's just because the day opened at the same area. And you can clearly see price didn't really move too much. If I did essentially understand that this was the range box, I could have potentially taken a sell here. I did see this move happening, but the reason why I didn't take a sell was because it was still in the 20% range. I didn't think price actually deviated so far. That's why I have these two liquidity areas here, because if price was to grab these two as well, I would have definitely taken a sell. But unfortunately, price didn't do nothing, and that's why I did not take no trade here. It really stayed within the 20% deviation. If we continue to Wednesday was just a bit difficult because I was wanting to take a buy if price did range 20% out, but obviously you can see price does not care. It did a lot of fake outs. There was no news today. All that happened, and the only place I was going to take a buy was the best area, and the best area was down here, right? So over time, when it gets to New York, I think it's either close to the end of New York or somewhere around that, price comes all the way down. So you can see that huge fake out there. Price comes all the way down, comes to the area where I would like to buy. And if I was trading New York, I may have been faked out here if I was to take a buy here, so I would have lost. And if I was to take a buy here, I possibly would have lost as well. Again, yeah, it looks like I possibly could have lost, or I would have still been in the trade. But overall, price just wasn't looking as good as I'd like it to, and that's why I didn't take no trades on Tuesday or Wednesday. On Thursday, this is how Thursday is looking right now and what happened. So I decided to take a sell, guys. Decided to take a sell on Thursday. Don't worry about this buy. This buy was my predicted area. It was just a forward test where I thought price was like, it was an intuition sort of thing. And this is where I thought price was going to go up from, and it did exactly what I thought, just because if we bring out the Fibonacci, you can clearly see 61% bounced off it perfectly. Price grabbed all of these 5-minute liquidities. And if this is considered a range, that's why the purple boxes around here, price literally grabbed the liquidity from down here before coming back up. So that's why I was like, okay, if price is going to do this and respect this area perfectly for a buy, the only thing wrong was the timing. I could definitely expect price to come all the way up here. And what happened was price came halfway and then rejected off this area. I took a sell right here, so I'll delete this one. I took a sell right here due to the fact that it was just correlating with my strategy. I understand completely why price rejected off this area, because honestly, in this time, I wasn't necessarily focused. I wasn't as focused as I should have been. But I still took a sell in the right area. I did cut my loss a lot because I just didn't think price was gonna respect the area. So if I go back to here, you can clearly see I took out my stop loss somewhere. I took out my trade somewhere here, which would have saved me 7.4 pips. I saved 7.4 pips from this trade. What I could have done better was really just be more patient or just not take a trade at all. The reason why I was skeptical about this trade is because price has been going down for a while, and this was the big move up for the retracement. And I just thought from this, I remember my sensei Jonas, he told me that when price comes for a big retracement, just put a box around it, and you can see that it can be considered a range if price decides to do what it did just today. And you can clearly see price literally grabbed liquidity, pushed up, and you can clearly see this possibly making it to the top up here and sticking in a range for a bit, because before this, price was just in a downtrend. So I was expecting price just to come up here. In the end, price decided just to come halfway and push down where it was close to the monthly open price, and possibly could have been other things here. Yeah, so price grabbed the 30-minute liquidity, and it was at 12 o'clock. Around 12 o'clock, I think price grabbed it. Yeah, 12 o'clock price grabbed it. I would have been asleep by now, so I wouldn't have taken the trade. I just took the sell here just because it was lining up with my strategy, although the bias was kind of, those multiple biases that could have been made in this situation, where it could have been a range, could have still been a downtrend, or it could have been a reversal. And 2 out of the 3 were against myself, so I completely understood why I would have gone stopped out if I had my 12.5 pip stop loss here, because I would have been stopped out right here. just because of, you know, where it was situated. If it was situated up here, right up here, I would have had way more confidence in the sell because it was a major liquidity area and it was going with 2 biases. So that's why I decided just to take this trade here, just to learn my lesson. And yeah, you can clearly see what happened. And the lesson to learn now is, if price is conflicting with a few biases, or if price looks like it's not in the best area, do not take the trade. It's not worth it. Because if I would not have taken this trade, I would have saved myself half of my normal trade amount, which is okay, but the losses build up over time. So yeah, so that was my thought to this trade. Didn't really need to take it, but I did. And because it was just matching with my strategy, but it wasn't in the best area. So yeah, guys, that's really it, guys. So I'll catch you all on Friday, see what happens there. Yeah. Alright guys, Friday is today. I just want to explain it quickly what I thought during this whole process on Friday. Friday made so much sense. I only secured a 1-to-1 on Friday and a break-even trade. And the lessons just overall, what I'm going to learn from Friday is just to probably have fixed take profits for my second trade, or just to give it more room, either way, or just to adjust my stop loss being moved to break even. So from this, knowing this, the reason why I took a buy here was because price came down first, came up, came back down, and it was just respecting. It grabbed a whole lot of liquidity. There was the daily open right here, and there was also a monthly open price right here. If I was to put a Fibonacci right here, you can clearly see price respected the 61.8% retracement, and that's why I was like perfect and going well with my, my range bias, and that's why I took a buy. I was expecting price to come all the way up here. Instead, price decided just to grab a bit more here and come back down for liquidity, which I'll quickly explain. Price came back down here to grab all this liquidity because it did not grab it when the move began. Like, yes, it did here, but it did miss this liquidity, and price was just chilling here early. It didn't happen during London, and that's why I expected price to come back to grab liquidity later on, or, well, the chance of price grabbing liquidity later on, which it did. But I also expected price to push up, and that's why I took a buy here. Took a buy here. It was a good area, a lot of good confluences. Price decided to reject this daily open, which was looking like it was going to go the opposite way to my stop loss. Instead, price broke through, and I secured my profits once price did all this move and then came back down. A lesson I could learn is probably just to get out right here. What I mean by getting out right here is because this area right here, you can clearly see it made a green candle then a red. I should have had my stop profit just below here, because once price truly breaks structure is when, you know, you call it, and then you look for re-entries in the better areas. And that's why I took out a bit later, because I wanted to give it a bit more room, but as you can see, price does not give a fuck. So price did this, came back down, and with the second trade, it had the right timing. It had a weekly open price, it had a daily open price, and on top of that, it had a lot of 5-minute liquidities grabbed as well. That's why I took another buy. It was so good. It was looking really good. I was definitely expecting news to push it up further. As you can see what happened with news. News pushed it all the way up here. The reason why I was break even, because price pushed up, hit my 50% retracement. For my stop loss to be moved to break even, price came back down to retest the area to push up. And as you can see, when news hit, price came all the way down to grab this bit of chunky liquidity, which I was expecting price to do previously. Instead, price did it during the news move and started pushing up and did this huge move before coming back down. So what I could have done here is probably to adjust my stop loss being moved to break even for different scenarios, like if price reaches liquidity up top, I move it to break even, or certain situations or certain systems, so that I could have catch this move and take more profits. And for this, probably to have my second trade to have a fixed take profit. But overall, guys, pretty good. Everything went pretty well. The reason why price pushed down here is because I wanted to grab this liquidity before pushing back up. So I could have literally gone in for a third trade right here for me to essentially grab this whole trade. Well, not hold this trade, but still be in the trade. I did expect if price was to grab this one, it was going to grab the bottom one down here, right? The bottom one down here. Instead, price just didn't push that way, and it didn't give a fuck. It just wanted to grab the recent close liquidity that it did today before pushing back up. So today it made a lot of sense. I guess if there was more news, it would have probably pushed down first down here to push back up to the top. That's what I was expecting. Well, honestly, I was expecting prices to push up first. Instead, price came back for liquidity, which makes too much sense. So end of today, guys, I broke just below break even, like half a trade below break even. And, you know, I'm pretty happy, pretty good, because, you know, I took this trade, got some profits in. There's still a few things to learn from this week that I can apply and improve on. And yeah, guys, so I hope you all enjoy. I'll catch you all tomorrow. Subscribe, like,